Accounting Information Systems, Week 5. The Chapter 13 learning objectives are as follows. Describe the relationship between the accounts payable cash disbursement process and its business environment. Summarize how various technologies, including e-invoicing and e-payments, can improve the effectiveness of the APCD process. Depict the logical and physical characteristics of a typical APCD process. Prepare a control matrix for a typical APCD process, including an explanation of how business process control plans can accomplish operations and information process control goals. Process definitions and functions. The accounts payable cash disbursements APCD process is an interacting structure of people, equipment, activities, and controls designed to create information flows and records that handle the repetitive work routines of the accounts payable department and cashier, support the decision needs of those who manage the accounts payable department and cashier, assist in the preparation of internal and external reports. Process descriptions. The principal activities of the APCD process are processing invoice received from vendors, disbursing cash to vendors, recording vendor invoices and payments in vendor subsidiary ledgers, informing the general ledger process to make entries for these invoices and payments. Process number 1, validate that invoice. The vendor invoice is a business document or electronic transmission that notifies the purchaser of obligation to pay vendor for goods or services ordered by and shipped or provided to the purchaser. Be sure to match the invoice to vendor master data to validate the vendor. Compare the invoice to the purchase order and the receiving report, the three-way match. Check the invoice for accuracy and update the vendor master data with purchase history. Process number 2, record the payable. A payable is recognized and recorded by creating a record in the purchase events data store that includes details on the general ledger accounts to be updated. Creating a record in the accounts payable master data to reflect an open invoice, payment due to vendor. Updating the inventory master data for the cost of items received. Differences among the PO, standard, and actual costs are accounted for as standard cost variances. Notifying the general ledger of the amount of payables that was recorded. Process number 3, make payment. The payment process is triggered by due date information and begins with the preparation of a list of payments due. This list is reviewed and amended. Disbursement is the amount of the invoice less any discount. Payment is recorded by marking the invoice paid on the accounts payable master data, making an entry in the cash disbursements event data store, and sending the payment data to the general ledger. Exception routines. Purchase returns and allowances frequently arise with respect to purchases. This exception usually occurs at the point of inspecting and counting the goods or validating vendor invoices. The purchaser transmits a debit memorandum to the vendor requesting the account adjustment. The vendor then responds with a credit memorandum indicating the authorized account adjustment. Fraud. Accounts payable fraud usually involves creating phony vendors in the vendor master data or submitting fictitious invoices. Controls to prevent this include carefully managing the process for creating vendor records, segregation of duties between the controller of accounts payable and the cashier who receives the checks. Both types of these fraud continue to occur frequently due to lack of adequate controls in companies, nonprofits, and governments. Cash disbursements fraud includes check forgery and fraudulent wire transfers. Checks can be counterfeited using computers or diverted. Prevention includes digitally signed electronic payments, that are either sent to the bank directly or cannot be altered without alerting the bank. There should be a segregation of duties between the check preparation and signing and between disbursements and bank reconciliation. Fraud involving the use of online banking credentials is characterized by spear phishing, emails sent to the target company. Malware that steals online banking credentials is installed when the email is opened or the recipient navigates to a bogus website. The fraudster uses credentials to transfer funds. Prevention includes firewalls, antivirus software, and training personnel about phishing emails. Organizations should consider performing all wire transfers from computers not used for other purposes. For Chapter 14, the learning objectives are: define and understand the basic functions of the HR management and payroll process. Describe the relationship between the HR management and payroll processes and their environment. Comprehend the relationship between the HR management and payroll processes and management decision-making. Depict the logical and physical elements of the HR management and payroll processes. Describe some of the technology used to implement the HR management and payroll processes. Prepare a control matrix for a typical payroll process, including an explanation of how business process control plans can accomplish payroll operations and information control goals. Process definitions and functions. Human capital management is the process of managing, hiring, training, assigning, scheduling, motivating, and retaining employees, presuming employees reflect a strategic investment rather than an administrative cost. This follows historically from personnel management, which focused on handling payroll and personnel administration and evolved into human resource management by adding functions for recruiting and improving employee relations. HRM recognized the importance of personnel in achieving objectives, but still viewed them as something that could be controlled. Implementing the human resource management process. Processing inputs. HR forms in the system's flowchart capture information about 3 HR-related events. First, selecting employees, which may be initiated by department supervisors and managers or started automatically by the system. Evaluating employees involves numerous activities, including reviews, which are initiated by managers and supervisors. Terminating employees closes the employment process loop. Decision is usually based on qualitative and quantitative data. Payroll master data. Employee payroll master data is the central repository for data about people who work for an organization. This data table combines data that originate in 2 functional areas, HR and payroll. The situation has potential control problems because staff in 2 departments can make changes to the data. The solution is to restrict online access so that each department can only change what it has control over. Payroll is recorded currently, quarterly, and year-to-date. Implementing the payroll process. Electronic time management system is a computer-based system that captures, stores, and reports time, attendance, and work on jobs. A payroll direct deposit system executes payments to employees. Net pay is sent electronically through the banking system, typically using the ACH network, and deposited directly to the employees' bank accounts. A payroll service bureau is a company that specializes in rendering payroll services to client companies for a fee. By using a service bureau, an organization can outsource much of the payroll process, including payroll calculation, paycheck preparation, and direct deposit, payroll tax reporting and payments to insurance and retirement programs. The process begins with workers recording attendance and job time in an electronic time management system. Once approved, the payroll system distributes labor costs and updates employee payroll master data, prepares paychecks for deposit to employee accounts, prepares outputs including pay stubs, sends payroll register to accounts payment, where a disbursement voucher is prepared for the payroll and taxes. The disbursement voucher is sent to the cashier, where a transfer is made for the payroll to the impressed payroll account. Several items sent to the General Ledger Department so they can reconcile the amount to be paid, the payroll register, the job time incurred, the labor distribution summary, and the amount disbursed from bank, the disbursement voucher. Many management reports can be generated for online viewing. Beware of payroll fraud. Types of payroll fraud include ghost employees who receive paychecks but do not work for the firm. They can be former employees or completely fictitious. Falsified hours and salary occur when employees overstate hours or increase the salary in their employee data. Commission schemes occur when sales or commission rates are overstated. False workers' compensation claims occur when employees pretend to have injuries to collect disability payments. Be sure to segregate the duties among personnel data creation and modification, payroll preparation, and disbursement. Direct deposit payroll to eliminate alteration, forgery, and theft of paper checks. Check employee master data for duplicate names and/or social security numbers. Compare actual to budgeted payroll.